Well, we're going to look at silver today and whether central banks are going to start monetizing silver. And by monetizing, I mean starting to add on to their reserves, monetary reserves, uh, add on silver, physical silver, which is something that only the Russian central bank or the finance ministry has been doing. Usually, central banks all around the world, the only precious metal uh, reserve that they hold, and they've been adding on a lot to it, of course, in the last 3 years, is gold. But there is some proof, small proof, albeit, that a major central bank in the Middle East is starting to acquire silver. And I think that could be explosive, uh, not just for the price, but just for the whole precious metals market. And I think it makes sense because if the world has to go back to having some kind of real money reserves, and I think that's becoming more and more clear, especially vis-a-vis the BRICS, but also vis-a-vis the U.S. There's a lot of talk of revaluation using gold as a reserve asset. It makes sense that they also use silver. It will provide more liquidity for not just the financial system, but for the economies. I think it's a no-brainer. Yes, silver is going to continue to be a very important industrial material or metal, but yeah, and that's what could drive the price a lot higher, the fact that central banks are going to start looking at silver. It hasn't even been reported in the news, but I have to thank actually SRS Rocco. And I've had SRS Rocco on the channel before a couple of years ago. And he posted on X what central bank just became a significant buyer of a silver ETF, a new trend change. That's right, the Saudi Central Bank just took a large stake in SLV ETF. So there you go. It says here Saudi Central Bank. It was on the 14th of August. They bought 932,000 shares worth just over $30 million. So the Saudi Central Bank actually, I think, is called the Saudi Monetary Authority, or SAMA, but they've put it here as Saudi Central Bank. That's very significant, as I said earlier. And I wanted to find this online, so I looked for it because I always want to be 100% sure that these things are legitimate, even though I trust SRS Rocco. But anyway, I found it, and it's here. Where is it? There you go. Saudi Central Bank. That's how much they bought here. 932,000 shares. And I said the Russians, they started buying silver as well last year. I think they announced in September that they're going to start buying silver and platinum. So Kitco even covered it. When did they cover it? Oh, that's July this year. Russia's central bank may be boosting silver prices through undeclared purchases. Silver prices may be benefiting from undeclared but substantial buying by Russia's central bank, according to journalist Tim Treadgold. That's a good name, Treadgold. Silver is moving out of a long shadow cast by gold, its precious metal sister. Treadgold, I think it's more like a big brother gold, really, wrote in a Forbes article on Tuesday evening, with hints of a major new buyer, Russia's central bank, starting to influence the silver price, which has risen to 14-year highs. Yes, and yesterday, August 22nd, we closed at a 14-year weekly closing high. So yeah, they announced this in September last year. As you can see here, it plans to add silver to its state reserve fund for the first time. Um, yeah, I'm not saying here that all central banks now are going to start loading up on silver and that silver is going to go through the moon. But I think it's very interesting because uh, Russia, as you know, is part of BRICS. Saudi Arabia is kind of on the fence. They are posted as being members of BRICS, but officially they're still kind of trying not to alienate the Americans. But I think this is a new trend, and I wouldn't be surprised to see also the Chinese and other banks, central banks, maybe even India, starting to buy silver. So why SLV? I mean, you might wonder, can they take delivery? Well, I had a look at that. I had a look at the rules, where I actually went on Chat GPT. I could have gone on the SLV prospectus, but this is what I found from ChatGPT about the SLV. SLV, it says if you're retail investors, you cannot directly redeem those shares for physical silver bars. It's only authorized participants, only large institutional players, typically banks and market makers, designated as authorized participants can create or redeem SLV shares directly with the trust. So the limit, you have to do at least 50,000 shares. Well, the Saudis bought 930,000, I think, shares, and they bought 30 million worth of SLV. That's just under a million ounces of silver, which is basically, I think, let's do the maths here. Get my calculator out. Well, that's like 32, 32 tons of silver. It isn't that much, 32,000 kilos that the Saudis bought, but we need to keep an eye on this. That's very interesting. And we're going to look at some charts in a minute, but I want to talk about Jay Powell. It looks like he's folded under pressure from President Trump to cut rates. He came out yesterday and at Jackson Hole, and he said that they're ready to cut. He paved the way for a rate cut in September. And the markets reacted very positively, not just gold and silver and the miners, but also the stock market. But I still think that the stock market is kind of topping, despite the fact that yeah, I think the S&P closed at an all-time weekly or all-time high yesterday, and we could still make new highs. But I was reading some research by Michael Oliver, who's been following these markets for decades. And Michael Oliver, of course, he's the proprietor of Momentum Structural Analysis. And he came out with something yesterday. And if you want to subscribe to his service, I recommend you do. It's olivermsa.com. Just go have a look. I'll put a link below in the description. Sometimes I bring him on here on the channel when we talk about it. Uh, But basically, he was saying that back in 2007, on September 18th, actually, which happens to be the date for the FOMC meeting this year, the second day when they will announce most probably the cut. They also cut rates. Ben Bernanke cut rates by 50 basis points, which was a big surprise. And the market actually, stock market rallied for the next few weeks and made a new high, and everyone was really happy. But yeah, made a new high in October. But then for the next year to year and a half, the stock market collapsed. So what Michael Oliver is saying here is that by announcing that they're going to cut rates, yes, it was a little bit of a surprise, even though there's been a lot of pressure on him to cut rates by President Trump. Yeah, he's basically saying that there's something wrong in the economy because if there was nothing wrong, they wouldn't need to do this. And I'll quote Michael Oliver. He says, a question for investors is the initiation of the rate cut signaling that the party time begins due to a resumed flow of artificial liquidity? That's his question. The other question is, or that the party, more broadly speaking, is over. So consider whether central bank monetary excess will help or merely place a tombstone on the market, as MSA has argued, and also inject more fuel into monetary metals. And yesterday I spoke about this with Clive, and you can watch my video with Clive from yesterday. I'm going to put it up in the cards above here. I said that not just the bullion, gold and silver, but also GDX and SILJ, the gold and silver miners, they're looking very bullish in terms of the S&P. And yes, as Michael Oliver says, we could continue to make new highs and people are going to cheer, but he thinks we're very near a top. Of course, he's done momentum analysis. And yesterday I mentioned as well that there's a big divergence with the RSI and the S&P on the, I think it could be the weekly or daily chart. I don't remember, but you can watch my video from yesterday if you haven't yet. So I thought that was interesting from Michael Oliver.
Gold and silver have once again captured the spotlight as America teeters on the edge of unprecedented financial and political instability. With Donald Trump's recent surge in polling numbers despite multiple legal challenges, and the U.S. economy walking a tightrope of inflation, rate uncertainty, and record-breaking debt levels, it has become abundantly clear that the fiat system, rooted in endless money printing and blind trust, is broken. Gold and silver are not just alternative investments anymore. They are lifeboats in a storm of economic and institutional collapse. Every fiat currency in history has eventually failed. The US dollar, once backed by gold, now floats on the whims of policymakers and central bankers. The Federal Reserve claims to fight inflation, yet it created the very problem with years of near-zero interest rates and trillions in stimulus. And now, with CPI inflation numbers still sticky and consumer sentiment in freefall, they've cornered themselves into a lose-lose situation. Raise rates and tank the economy, or ease and ignite another inflation wave. Either way, fiat suffers. But physical gold and silver, finite, real, and time-tested, thrive. In the last few weeks, silver has quietly outperformed many other assets, pushing past key resistance levels while being largely ignored by the mainstream media. Gold, too, is testing all-time highs amid global central bank accumulation. Why are nations like China, Russia, and even Poland buying tons of gold while telling their citizens to hold cash? Because they know what's coming. They know the dollar is losing its dominance and that the next financial system won't be built on paper IOUs. It will be anchored to something real. Trump's return to the headlines isn't just about politics. It's about economic sentiment. His recent statements slamming the Federal Reserve and calling for a return to sound money are echoing louder than ever. Trump understands that Americans are losing faith in the institutions that manage their money. Confidence in the Fed is near all-time lows. The Treasury is issuing debt at a breakneck pace. Social Security is on track to go bankrupt. Meanwhile, the stock market continues to float on speculation, artificially supported by Fed jawboning and tech hype. But beneath the surface, cracks are forming. Young investors are waking up. They're beginning to see the trap. Save in dollars, and you're guaranteed to lose purchasing power. Trust in stocks and crypto, and you're subject to manipulation and regulatory whims. The only assets with a 5,000-year track record of preserving wealth through every war, recession, and regime change are gold and silver. And right now, silver is arguably the most undervalued strategic asset on Earth. Not only is it a monetary metal, but it's also essential in solar panels, electric vehicles, and industrial applications. The supply is shrinking while demand is surging. This is not a speculative narrative. It's a supply chain reality. Meanwhile, America is sleepwalking into another debt crisis. With over $34 trillion in national debt and interest payments now rivaling military spending, the writing is on the wall. The government has no plan to pay it off. The only tool they have left is inflation. Silent theft through currency debasement. If you're holding dollars, you're the victim. Every printed dollar makes your savings weaker. Every stimulus check, every bailout, every new government program funded by the printing press, it's a transfer of your wealth to the state. Look at the banks. Regional banking stress has returned, and big names are warning of a new wave of collapses. If even one major institution falls, a domino effect could ensue. And with FDIC reserves under pressure and trust in banks declining, people are beginning to ask serious questions. What happens to my savings if the system locks up? If you can't hold it, you don't own it, and that's why physical metals are making a comeback. Gold and silver require no counterparty. They cannot be hacked, frozen, or inflated away. They don't rely on government promises or Wall Street gymnastics. In times of war, regime change, or collapse, like the world is inching toward now, they are the final fallback. Just this week, Trump warned that America is closer than ever to losing the dollar as the world reserve currency. That's not alarmism, it's fact. The BRICS nations are actively developing a gold-backed trading currency, and the world is watching. The petrodollar era is ending, and with it, the dollar's dominance. Gold and silver will outlive fiat. They have outlived every empire that thought it could print its way to prosperity, and they will outlive this one too. While Wall Street distracts you with AI stocks and debt-fueled bubbles, the smart money is quietly accumulating hard assets. If the monetary system resets, and history shows it always does, those holding metals will have purchasing power while everyone else scrambles for crumbs.